U.S. inflation expectations fell. Does this mark a turning point for the dollar? This is Marshall Gittler, head of investment research at BDSwiss, bringing you our daily market preview. The big event in the yesterday was just simply seems to have been a change in sentiment around U.S. inflation. If you look on the graph on the left here, the blue line is the break-even inflation rate for the U.S., what the market thinks inflation is going to be over the next 10 years. You can see how that came down yesterday. And with that, the red line, U.S. bond yields, 10-year bond yields also came down. This is a big change in view. As a result of that, expectations for Fed tightening also retreated. That's the graph on the right. The blue line shows Monday's forecast for the Fed funds rate. The red line shows Tuesday's forecast. You can see how expectations for Fed tightening came down a little bit over the day. As a result, the dollar weakened and the euro strengthened. This could be a turning point if it keeps up. I'm not sure that it will, but since there seems to have been no specific trigger that I can think of, it may well be just a change in sentiment that could carry on for a few days. We also had yesterday some other and it was particularly noticeable because the IMF upgraded its view on the U.S. economy, which could have sent U.S. rates in the other direction, but it didn't. There was also some other reasons for the euro to strengthen against the dollar yesterday. We had European stock markets hit record highs. Now, this is nothing new for the US, where the markets just keep going higher and higher into record territory every day, but this was kind of new for Europe. This may be pushing money into European stock markets, which would tend to boost the euro as well. Underlying this could be some hope for improved vaccine rollout in the EU. That's been the Achilles heel of the euro recently. The European Commission yesterday said that most member states will have sufficient vaccine supplies to immunize the majority of people by the end of June. That's very good news. It's been really a dog's breakfast, the rollout of in Europe. Just any news that they're going to be able to deal with it is good. Also, by the end of June, I'm very hopeful because I'm scheduled to get my second shot in June. So I really hope they do that. Aside from that, what's on the schedule for today? We've got some trade figures coming out. The U.S. trade deficit is expected to hit a record in February of $70.4 billion. That's forecast to beat November's $69.04 billion. This is a result of the fiscal payments that hit people's bank accounts in January. They went out shopping, and what did they buy? They bought imported goods. I think this widening U.S. trade deficit shows how the U.S. will be a driver of global growth this year, as the IMF pointed out. If you think this was a big move in February, wait till you see what happens when the March payments hit people's bank accounts, and those payments are going to be much bigger, and they're going to be going to almost everybody. So we should get an even wider and wider trade deficit. That's, of course, going to benefit the trade partners of the U.S., like China, like Germany, like South Korea, and Canada. Canada, I think, is going to be a major beneficiary of the U.S. fiscal expansion. Just look at these figures here. We've got the Canadian trade figures coming out today, where they're expected to see a surplus of 1.3 Canadian dollars, down a little bit from the previous month's 1.4 billion, but still high. Especially if you look at the graph on the right, most of the time Canada used to have a big trade surplus, but after the global financial crisis in 2007, 2008, it turned into a deficit most of the time. But I think the U.S. Fiscal expansion could help to reverse that, and I think the Canadian dollar is likely to be one of the major beneficiaries of the U.S. fiscal policy. Well, thank you very much for listening. For more information, please click on the link below and read the full comment on the website. This is Marshall Gittler, head of investment research at BDSwiss.